The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to the June 21st fantastic Friday edition of the Nadex Bull Bear Binary Option Hour with your hosts Darrell Martin and Steve Rhodes. Tom is off teaching tigers and tigresses who got in on that Tiger Dollar promotion, so he will not be with us this morning. But folks, Darrell and I, we are grateful for your presence here today, and our outcome is to teach you how to set it and forget it. You know, after Ron Popeil out there, you know, the most important aspect of trading is capital preservation. And that's the real beauty of the Nadex platform, because your trade is your stop. Your risk is your risk. Your stops are automatically placed when you enter your trade out there. Nadex is a better way to trade. And our man, Darrell Martin, well, he is the Nadex expert. Our call-in number is 877-927-6648, and we would love to field your calls. Let's start today with a beautiful thought. It goes like this. Live life fully while you're here. Experience everything. Take care of yourself and your friends. Have fun. Be crazy. Be weird. Go out and screw up. You're going to anyway, so you might as well enjoy the process. Take the opportunity to learn from your mistakes, find the cause of your problem, and just simply eliminate it. Don't try to be perfect. Just be an extraordinary example of being a human being. You know, folks, if one of your mistakes in trading is using stops, then learn the Nadex platform, because set it and forget it, and there is no better man than Darrell Martin to be able to teach you how each day from 1 to 2 p.m. here at TFNN.com. Good morning, Darrell Martin. Uh-oh. Do we have Darrell? I think we do. I just, for some reason, can't hear him. Darrell, we got Darrell? Well, I'm going to let our technical expert here make sure that we get Darrell on the line. I know he's supposed to be out there. So let's go take a look at these markets here. Let's go see what we've got going on at the moment. Right now, we've got the Dow here is trading up 60 points, out at 14,819. S&P is trading at 1595. That's up 7 points. The composite here is just slightly red, down 58 pennies. Russell 2000 up a couple of bucks. We've got Google back $3 and change, Apple off 240, Microsoft down 23 ticks, Intel is up 7, Cisco is flat out here. Leading the charge to the upside is MasterCard this morning, up $5.40. We've got Intuitive Surgical up $5. That's up 1%. Regenerate Pharmaceuticals up 2% this morning. That's up $4 and change. Spread Trum Communication up 18%. We're going to check in on that stock chart as well. Spread SPRD is the ticker symbol out there. Let me see if there's some kind of news behind here. A buyout by Tsinghua, Tsinghua. Sounds like a China firm out there. So that's what's behind that move. Public Storage, that's up a couple percent this morning. PSA is the ticker symbol there. Visa up $3. You've got Theravance, THRX. I know we've got that stock chart saved in my system, and so we will go take a look at that. We've got to the downside here, you've got Google is the leader in the clubhouse off $4. Netflix down 4 as well. Apple down $3. Oracle, the big leader of the downside, off 8% this morning, down about $3. Lumber Liquidators, LL, off 3.5%, down 278. BlackRock down 291. Legren off 277. Rockwood Holdings, ROC, off 4% this morning. That's off $2 and change. So let's go check in on some of these stocks here, popping and dropping. Let's go see what we've got while I know that Al gets Darrell on the line. Darrell, when you do get on the line, just shout in my ear, if you will. So let's go take a look at some of these stocks here that are popping and dropping. Give me a moment here to switch over here. And I want to take a look at I want to take a look at that Theravance. THRX is the ticker symbol. Now, this one here had a three-gap play, exhaustion gap out here that took place on the trading session of May 13th. What's a three-gap play? Three gaps, you got three clear gaps that you can see inside the equity, and that third gap needs to be bigger both in dollar and percentage terms. In this case here, inside Theravance, THRX is the ticker symbol. First gap had a $1.42 gap. That was... oh, now I'm hearing myself in my ear, so that's interesting. So that was April the 15th gap. That was $1.42. The bottom of that, again, that was on April 15th, 4.7 million shares. The next gap took place on April 18th. That was a $1.34 gap from the prior session. And then the big one, that took place on May 13th, $2.65 gap, going up with volume, big volume on that session as well, 8.2 million shares. Now, this thing did come back into the first gap. Typically on these patterns, it will move all the way back down to the very first gap out here, and that would be nice if it did. That might be a nice buy opportunity. But this morning here, it is moving up. It's got some decent volume so far behind the move out here. It's got 1 million shares. What is that going into, though? You know, it may find a little bit of resistance out here as it gets back to the low of May 13th. That had big volume, 8.2 million shares, and those folks that bought in anywhere between the price level of $41.23 to $38, they probably weren't that happy with the trade when it got down into the level of $32.89 out there. So we'll see if this thing will hold. But really, I put this on my stock chart. The volume so far off of the highs out here has been pretty nice. So you'd like to really see this thing come back into these other gaps. That is on Theravance out there. Let's go take a look at what else? Public storage. PSA is the ticker symbol. Go take a look at that, and then what we'll do is we'll go look at what we do as we normally do by taking a look at the index to see what took place yesterday. So we got public storage here this morning. So this thing here is up off of its lows out here. Give me a moment to just refresh my screen, make sure that we've got everything out here. Come on, baby. I got a little delay here. There we go. So this thing moved down yesterday with 1 million shares. It was taking out the swing point that had 767,000 shares, and that was from March the 13th. Also, is it taking out a B point that at 632? That was the June 13th low, 632,000, and yesterday took it out with 1 million shares. So this could be a large A to B equals CD down in the marketplace. I suspect we're going to see a ton of those over the upcoming weeks out here. That says public storage could come all the way down to the 133-ish range out there. And that would take it back, take it back into the October lows for sure, but more likely back into May of 2012 out there. I do believe we got our man Darrell Martin with us now. Darrell, you here?
What's going on, man? How you doing?
Do we have Darrell? Boy, I'm just having trouble getting Darrell into my ear here, Al. So let's do that during the break so that we don't be going through that process. We'll try that out. So, folks, I'm going to go take a look here at the actual indexes. Let's go see what is going on here. Let's start off with the S&P 500. As we take a look at the S&P 500, yesterday we had if we're looking at this chart here, yesterday we had a 23% one day. Oh boy, they can hear Darrell on the other end. I'm sorry. So we'll figure that out on my end. Thanks so much, Jay. And so as we take a look at the S&P 500, yesterday, as I was saying, the one-day VIX increase of 23%. Typically, that leads to a little bit higher close on the following trading sessions. Anytime that we have a greater than 10% change in the VIX here, and this goes back to the study goes back to 2001. It has a 60, I think it's a 65, 66, 67% increase of the following trading session, just simply being a positive close from the prior day. We'll see if, in fact, that happens here. What we can see with regard to the S&P 500 is we can see how it broke that trend line coming off of the November 16th area. You use that as your first touch point. Your next touch point can be the low on December 31st out there, and that low is 1398.11. Now, what's really going to be key here in watching is if you take a look at the low yesterday, got down to 1584.32. Folks, 1576.09. That was the top of the trading range. 1576.09 was the top of the trading range. That was a breakout from 2011. The S&P 500 will be the first one back below the 2007 highs. The confirmed A to B equals CD, just the 1-to-1 takes you to 1565, which is inside that swing point, but that is not the type of A to B equals CD that's going to form out here. That volume that we had yesterday, the conviction that we've had off of the C point, tells us that 1541.35 and the price level of 1546.72 happens to be the bottom of that November 11, 2007 swing point. But we know the S&P 500, the minimum target for the S&P 500, that's because we're in that 6-month unfavorable cycle out here. That's the seasonal cycle that we are in. That's going to take us down into the level of 1470.64. That's the minimum price objective of this move down. That's when we can start taking a look at the fact that the correction may be over, or any kind of real significant bounce that we would see inside the marketplace. And that level really takes you right down to the 1 to 2 A to B equals CD. That would be at the 1477 level. That's what I expect that we will see at a minimum during this cycle out here. And so, the unfavorable seasonal cycle doesn't mean that you have to stay short. The sell in May doesn't mean that you have to stay short the entire time period. Instead, you're really looking for a nice bottom to come in, and yesterday was not it. So that's on the S&P 500. Let's go over and take a look at the, see what do we got up next here. Let's take a look at the New York Stock Exchange. New York Stock Exchange right now trading out at 9,018. Actually, it doesn't look too shabby here today. Let me see what net advancer are declining. So we do have 808 net advancing issues this morning. In fact, the New York Stock Exchange, which is a weak link in the marketplace right now, is actually the strength out here. New York Stock Exchange is up about 0.2%, so if we're going to call it any kind of strength out there, but it is the strength inside the marketplace. However, this has a to B equals CD down. That'll take you into 88.53 out here. That would be your 1-to-1. That takes you all the way back into the April 18th time frame, 1 to 1.272. That takes you all the way back to February of 2013. And where this is really headed to is going all the way back into the January gap. So that's what the New York Stock Exchange is doing. It's headed to that December 31st area, that high of 84.47 out there. That's on the NYSE. Let's go take a look here at the let's see what is next. Let's take a look at the top line number. Let's take a look at the Dow. Look at that wide-ranging bar yesterday on the way down. Now, this was the initial pattern that I had drawn in here, which was the 0.786 Gartley buy pattern. And that's the Gartley buy pattern that would have come off of the April 19th low, 14,444. If you go from that low to the high put in on May 22nd, your 0.786 retracement would take you right into about the 14,709 area. At 14,709, you can see it also was a 1.272 expansion of the swing points. But the way that came down yesterday, which, by the way, it got to 14,732, so that's almost completing it. The way it got down there, folks, that says, you know what? This thing's going to turn into a butterfly. 14,211 is going to be one of its next targets. 877-927-6648. I'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. Right now, the Dow's up 31. S&P is up 3. NASDAQ Composite off 8. The NASDAQ 100 down 11. Let me put up on the screen here. Let's go see what the strength and the weakness is inside the market. See if I can get this tool. I should have actually tested this out during the break, so I may have to do that during the next breakout here. Okay, I've got this coming to life. So let's go take a look at the NDX 100 out here. And Oracle being the big drag, that is off 292 right now, down about 9% out here. Netflix also putting some weakness in. You've got NetApp, Western Digital, Adobe, Autodesk, Citrix, F5, Microsoft. Let's take a look at to the upside here. Putting some strength in is Micron Technology, Amgen, Alexion Pharmaceuticals, Regeneron Pharmaceuticals, Facebook, Costco. That's what's going on inside the NDX. Let's take a look at what's going on inside the Dow. The big performer this morning, percentage-wise, is Merck & Company, Procter & Gamble just behind them, Coca-Cola, General Electric, Verizon, Walt Disney. They were big losers yesterday. To the downside, Bank of America taking a hit this morning, down a couple of percent. Hewlett-Packard, J.P. Morgan, Microsoft, IBM, and Bowie to the downside. Inside the S&P 500, To the downside, Oracle, of course, Allegrin, Citi Group, Darden Restaurants, DRI. It's trading down a couple of percent this morning. Morgan Stanley, Netflix, DR Horton. But we'll take a look in on DHI. Is that ticker symbol? Sprint, Nextel, Teradata. To the upside inside the S&P 500, you've got the leader out here is EQ Resident, EQR. Percentage-wise is their ticker symbol, up about 3% here this morning. Advanced Micro Devices, AMD, up 2.8%. Bristol Myers Squibb, that is up to almost 3%. Baxter International, Brown, Foreman, Micron Technology, Merck, Cardinal Health, Archer Daniels Midland. Those are what are putting the energy into the S&P 500. Let's stop and take a look here at the New York Stock Exchange. You've got Pharmerica. That's the biggest percentage decline. That's down 11% here. So we'll take a look at. Since I put this on this other chart here, I'm going to write down some symbols here. I guess I can go back and forth. But PMC, we'll go take a look and see what Pharmerica is doing. America Realty, ARL, is the ticker symbol. They are the second in the percentage-wise to the downside. So we'll take a look at both of those equities. We often don't take a look at what's going on under the covers inside the New York Stock Exchange, but we'll go ahead and do that here this morning. Let me see if we can find out anything to the upside. Okay, well, I'm going to skip there we go. So to the upside, you got Ursa Inversion, IRS. Oh, I don't know. Do we want to take a look at this? Or three bad initials these days, IRS. But that is to the upside. That's about 9%. You've got Hunig Pao, HNP, is the second leader in the clubhouse. So we'll take a look at a couple of those equities as we see what is moving in the marketplace. So give me just a moment here to switch over to that tab. There we go. Go over to the earnings tab that I've got here. So we're going to take a look at PML. PML is the ticker symbol. And give me a moment here. It's not pulling it up. PML is a ticker symbol, and that is for it's $11 stock. So really actually formed a hammer candle yesterday. This is PML. I show that as PIMCO Municipal Income Fund. I must have written down the wrong thing. So it was not PIMCO's Municipal Income Fund that I wanted to punch up there. So let's go. The one I certainly do remember. I can't read my own writing. How about that? I do remember we talked about IRS though as the ticker symbol. So let's go see what in fact that is doing. That is Ursa Inversions. So that's up nicely this morning, gapping up. So let's go peeking on this. I have no idea what they do. We can check it out though. They are. Ursa Investments and Representations through its subsidiary engaged in a range of diversified real estate investments activities in Argentina. Okay, so we're going to go around the world here. We're going to check in on this equity and see what it is actually doing out here. This is a first-time viewer on TFNN.com. So as we take a look at this yesterday here, moved down with some decent volume, coming back into a recent swing point, did 250,000 shares, so not a very liquid asset out here, stock I should say, coming back into its swing point where it had 67,000 shares, so that is not a good thing. Looks like this may have some more to the downside out there. Folks, we're going to try one more time during the break, see if we can get our man Darrell on, and if not, then we'll just simply go back to indexes, ETFs. You can give us a call at 877-927-6648. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour, and I believe I heard the call, release the hounds. The Bears back in control. We're looking at the 120-minute chart here on the ES Mini. It's heading back towards the bottom of that descending price channel that it has been traveling in, so it should get down and test the 1577 area. That was the low coming in at 430 yesterday. It's trading out at 1581.75. That is on the 120-minute chart. Let's go back. Let's take a look at the ETFs. Let's take a tour around each of the ETFs out there. And as we take a look, we'll start off with the Dow Diamonds. So yesterday, the Dow Diamonds being able to take out the June 6th low. That low was 148.31, 15 million shares. Doing it yesterday with a very wide-ranging bar. Now, make sure when you take a look at your stock chart here that what you do is you actually fill in those gaps. because when you fill in those gaps, when you do that, what it does, it actually tells you the real power behind a move out there. So as we look at that, in fact, I'll go ahead and fill in this gap here so we can see just how wide-ranging a bar that it was when you would take a look at the diamond. As soon as I could find this little tool out here. So we'll go from the close of the June 19th bar all the way down. I'll see if I can get, so just about like that. I'll change the color here. We'll fill that in as red. And as I then go ahead and I move this over here, this in essence is really what that candle really looked like as well from yesterday. Well, put it down just a tad here. So a real wide-ranging bar, and a wide-ranging bar, that tells you the real energy that this thing has to the downside. The volume was similar as it crossed the B point yesterday. 14 million shares versus 15.1. It was really 14.3 out there. So just a little bit light. What we can see here that took place this morning, the bottom of that candlestick, June 6th, is 148.31. The diamonds got up to 148.28. Tried to tag that area. It was tag and go, and now it's go down to about 146.53. That's your .786 level. That wide-ranging bar, the way that prices come off of this C point here, no. That's not where it's going to stop. It's going to head all the way down into that April swing point. That only has 11 million shares there, and the top of that is 145.57. So pay attention to the volume as price moves down into that area. Again, that price is 145.57. You're at 147.18 at the moment. That is on the DIA. Now let's take a look here at the SPYs. As we take a look at the SPYs, they're traveling at 158.40. Now the SPYs absolutely had volume, big volume coming out of it. SPYs here yesterday doing 320 million shares as they took on the swing point from June 6th that only had 200 million shares out there. You got a confirmed A to B equals CD down inside the SPYs. That says 157.19 would be your 1-to-1 A to B equals CD, but is that where it's going to stop? No. Now inside the SPYs at October 11, 2007 swing point, that's at a price level 157.52. Once the SPYs get inside that, that becomes your false break to the upside out here inside the SPY. Volume on that swing point is 233 million shares. That was October 11th. Yesterday, just to give you an idea, again, the volume, 320 million shares there. So if volume continues to pick up to the downside and you're crossing back into that level with more than 233 million shares, that is a real big heads up as to what is going on in this marketplace out here. So where are the SPYs headed to? Well, are you talking, what's the time frame? Let's take a look at where are they headed to during this unfavorable cycle out here. I'll go back and take a look. What was the 200 period EMA on April 30th? Inside that SPY, it was 147.17. That is where the SPY is headed to at least. You can expect that to be at least out there. Let's go take a look at the Qs here. So we take a look at the Qs. The Qs yesterday taking out the B point, the hammer candle from June 6th out there. We take out a hammer candle. If you're long, you're wrong. Volume-wise, yesterday similar, 60 million shares versus 62 million shares. You can see now the Qs have completed the 1-to-1 A to B equals CD. That was at $70.28. You're at 70.32 right now. 69.96 is your .618 level. But the Qs here actually leading the charge this morning on the way down. Already 13 million shares. Yesterday did 60 million shares. We've only been trading for an hour. So the Qs now picking up, giddy up in go, steam to the downside. Let's go check out. We did the IWM. Let's check out the IWM, and then we'll go out to Mark in Fort Collins. The IWM yesterday had volume as it took out the B point. Now, the IWM yesterday did 76 million shares. That was going against the June 6th area that had 46 million shares. So the IWM getting things back in swing here to the downside. So really the SPYs and the IWM taking out the June 6 lows with conviction. The IWM, take a look at the explosive move off that C to D leg. That says 93.43-ish is your .618 level, but that explosion there, that says the .786 probably before it really may stop out there, and that'll take you all the way back into the April swing points. Let's go out to Mark in Fort Collins. Mark, thanks for calling. Thanks for holding. How are you this morning?
Good. How are you?
Good. Hey, the fires. How are the fires out there in the Colorado Springs area? On the west coast, on the east coast here, we don't get updated on that so much. How are the fires out there?
Well, it seems like they put one out and another one lights up somewhere else. It's just been really hot and dry, so we're just kind of hoping for a little wet weather, but we're not getting any. So
yeah, talk about the devastation. What, maybe 400 or so homes so far that have.
Yeah, it's rough.
Yeah, what a tough situation for sure.
We don't want to live in the woods right now. So.
Yeah, you want to take a look at? I see here. Your question is about maybe the lunar cycles, or
yeah. So I'm looking. So this is kind of just a little theory here, and not that it means much. But I'm just looking. Let's just take, for instance, let's take either the diamonds or the maybe the spies. And I know you just talked about it.
Yes.
But I'm looking at a little downtrend channel that's now starting on the daily. That starts at the low of the 23rd of May.
Give me a second here. Let me pull up the spies here for you. So the 23rd of May, yeah,
And then it runs down through the lows of the 5th and 6th of June.
Yeah, let me pull up a different spy chart here, a clean one, and start with that. That'll make it easy, and that way everybody following along on the home game at TFNN, they can follow exactly. So you're setting. Oops, I meant to delete everything out here. Okay, so basically you're using a channel line. Now, are you using the top or are you using the bodies of the candle?
I'm going from the bottom of the wicks of these candles, actually through a little bit through. So the bottom of the wick of the 23rd.
So it'd be maybe something 23rd. Like that. No,
so we've got it like down. We're about to touch pretty close to the underside here, or the bottom of the channel. There's one on the very top and then one on the bottom. So I'm going through just the bottoms of the days.
Yeah, and on the bottom, are you using June 6th as well? Is that what you're using?
6th. Yeah.
Okay, got it.
And so we're getting close to touching that line here. If we go down a little more today, possibly even on Monday.
Yes.
And my thought is we're coming into a pretty good lunar cycle this weekend, and I guess and if we were to hit a low here for that cycle, and then maybe bounce lightly for a couple of weeks, and maybe even back up to the top of this channel, if you were to start at the highs and work your way down. Although it did get broken on the top side those few days, 3-4 days ago. I wonder if you're thinking we could bounce back up. So for a quick couple week or a week or two pop from if we really get oversold here the next day and a half.
Well, here's kind of here's my thinking. I'll go back to I'm going to pull up the actual S&P 500 because I have all of the new moon, full moons. No, that's the wrong one here. Let me pull that up. There we go. S&P 500 with the full moons and the new moon. So here's kind of my take on things, and that is that so today, as an example, when you have the VIX that has a one-day reading above 10%, the probability, just simply if you take a look at math and statistics, that has a real high and a plus 23 since November 16th. We've seen 8 of 11 of these work where we've seen at least a higher close today. Now the day's not over, but the last one that took place, what we saw, which was we saw the market, we saw futures move up in the morning, and basically selling begin once the market had opened. And it looks to me like we're seeing the same thing today. And since 2001, that's had like a 64% chance of a higher close. When that fails, that starts to tell me, okay, there's some real, this downward cycle is going to be like sell every single small rally that even comes into the marketplace out here. With regard to the full moon cycle, coming all the way back to November, I'll just use that uptrend which was just broken, because that's the real important trend line out here. Is this trend that was broken yesterday? And if you just go from your trend line, from November 16th, and then use the December 31st area, that's the real important trend that was broken. I don't think it'll, in this case here, when you break a trend, oftentimes you go back up and you'll test it with that wide-ranging bar what we had yesterday. I don't see that in the cards at all. The lunar cycle, so the full moons that have come in since November 28th, they have each marked bottoms. even if there was really no retracement out there. When they have come in, they've marked some bottoms, with the exception, Mark, of the last one, May 25th. May 25th saw that one-day bounce, and on these full moons or new moons, you really need to be able to move them, one day, maybe 2-day orb one way or the other. In this case here, I'm going to see that full moon from May 25th, really you move it over to May 28th because that was the weekend anyways.
Right.
So it really was. So that really did mark the high out here, and I don't know that this is. I mean, the potential for a bounce. Sure it is there. I guess I don't see. Are you thinking of playing it to the upside as a short-term trade or something?
Yeah. So I guess the thought was if we touch this current new downtrend channel line in the next day or day and a half, and we get a nice spike low here. And then a lot of times what the market will do is go back up to test that channel it just broke down from, and then maybe come back, and that would intersect kind of with the top of that downtrend channel too, right there. See what I'm saying?
Yeah.
So if you make this current channel and you intersect your blue line that you were putting up there on the top with the channel that we just broke down through, I guess the potential would be to go back up and touch that before we fall back down again.
Yeah,
and that would kind of coincide with us going up into the July 4th holiday and then falling apart after that.
Yeah. My original thoughts were that the market would move down into July 4th, and those thoughts are really based around this chart here that I'll go ahead and put up on the screen. It was really based upon the correlation between lumber futures and the U.S. stock and the S&P 500. I need to find that. I think that's on this next tab here. And the reason why I chose July 4th is because if you push this forward by 5 weeks, it has a pretty good correlation to what goes on in the markets. And this thing here, if we go all the way out, it's really right around the July 4th time frame, the July 4th weekend. It's July 1st out here. And I think July 4th falls on a Friday this year, or Thursday. Maybe it's a Thursday. Quite frankly, I can't recall. But that is what really that shows, is that the market moving down through that time period and then seeing a bounce and then seeing a continued move back down. And a continued move back down right now is taking us into the end of July out here, but it could go even further. So there's a pretty good correlation, directional correlation for some reason between the lumber futures. I think this is really if you're looking for any bounces, I thought we would have gotten one here this morning just based on some of the things we've already talked about, also based on the ES Mini getting down to the bottom of this price channel here. This is the price channel I think that we follow this, because this one is a longer-term one than what we were looking at on that daily chart for the S&P 500. And I think if you follow this price channel, this one has been working really well at identifying the highs and lows. I mean, even this morning here, we just saw during this trading session that we're in right now, this 120-minute time cycle, we saw another push down into that, and we're seeing a little bit of a bounce, off of this area here. So this price channel really seems to be working well, and maybe there's a way to overlay the S&P 500 on a 120-minute time frame over it as well, and maybe you get the same type of thing. Do you use the futures contract at all too?
I haven't been using that as much. I haven't, but I've been watching what you guys do with it. I watch Basil, and I watch what you do with it too. So I personally, so it does. Whatever you guys have been, your advice to date has been wonderful, and I'm just trying to think a little bit outside the box here, and just see if we maybe do come into a major. Not a major low, but at least a short-term low here and then move up into a new moon.
Well, I tried that earlier this morning and got stung just for a small loss. My thought was because we came down into the bottom. If you want to stick on through the next break here, we can finish that up. All right.
Okay, sounds good.
All right, we'll be back with Mark from Fort Collins. Right now, Dow's up 34, S&P is up 1. We'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's up 50 right now. S&P is up 4. NASDAQ here really struggling off 9 points. Russell 2000 off 1. New York Stock Exchange is still up 17 points. We're going back out to Fort Collins, Colorado, to Mark. And so, Mark, I was, take a look at the S&P 500, and I put it on the 120-minute chart out there. And, I was able to draw some channel lines. Now, on the channel lines, can you go to the 120-minute time frame on your charting platform?
Yep.
So, what I used here to try to represent the same 120-minute price channel inside the ES Mini, I'm using the top of the candle, the open of the candle at 13:30 on May 22nd, so 1:30 in the afternoon. And in order to have a price channel versus a trend line, what you want to use is at least as many contacts as you can find here. So and you want to have at least 3. And it looks like we're very close to getting that because you've got your close at 2:30 in the afternoon on June 18th, and then the open on at the close at 4 p.m. on June 18th as well. And so that's what I'm using for my top area. And for the bottom, it's actually swinging back here to the time frame of the close at 4 p.m. on May 8th out there, and that was at a price level of about 1632.65. And if you go from that line down to the low that came in at 1:30 in the afternoon on June 6th, that seems to set up a really good area for the bottom of your price channel. You have quite a few co-located, means it could be an open or a close connection points there. So I think that's what we're seeing, and you can see here, now if it breaks to the downside, it's really not a breakout because price is traveling, or a breakdown because price is already traveling lower out here. But if you're looking for decent support and resistance areas, use this, maybe try to overlay those same lines on a 30-minute chart or something like that, especially because you're looking at maybe more of a potential intraday type of action. But right now, from a lunar standpoint, my thoughts were this morning, I was getting this signal that, it was okay to take between the 23% VIX reading we had yesterday, some shorter-term signals out there, knowing we were down around the bottom of this price channel, and that price might move back up into the full moon, just as it did last time. That was my thinking on taking a quick trade and doing that like today, for example, as opposed to the reverse where we would start to see lows being made on the full moon. So maybe price moves up Monday. I don't know, but I don't think there's much that we're going to be looking at here as bounces. I think the selling is started, and it's just going to continue.
Yeah, my thought was we might be down hard into the full moon either today or Monday, because if we don't hold this rally, everybody might just throw in the towel, and then we could get our bounce into the new moon, and then start all over again to the downside. So it's just kind of my little theory here.
I hear you, and it's great logic. And the cool thing is, I imagine by Wednesday we'll know the answer, huh?
Yeah, and I'm just sitting on the side watching today because I got out of all my shorts yesterday, and so I'm happy camper, just trying to figure out where the next move is. So.
Yeah, I think ideally, what I'll be spending time over the weekend, we're short in the newsletter, and really what I'll be spending time on is where are the next best short setups out there. And the question just becomes trying to figure out where is it that you go ahead and you take your entry points into it. In my opinion, that's really the best play.
Yeah, and I wasn't looking for a big long scalp. I was just looking for a quick scalp trade to the upside and then back to the short side, so.
Well, just use your stops. That way you only lose a small amount of your hair and you don't actually get scalped out there.
Sounds good. Thank you.
All righty. Hey, have a great weekend. Lou, sorry that we weren't able to get to you. Stay tuned on Basil. Maybe he can talk to you about the 30-year bonds out there. Folks, have a fantastic weekend. Be safe, and we'll look forward to seeing you Monday morning. Take care, folks.